I'm here today with one of the most prolific investors and traders in the markets in recent years. Doc Holliday disappeared from our screens during the past year, but he now sees value in the markets and is back with a bang. Doc, it's good to speak with you again. How are you doing?
Yeah, I'm good. Thanks, Al. Thanks for inviting us on. I'm really well. Good to be back chatting markets and sort of trying to find some value where we think there's some either now or in the not too distant future.
Yeah, indeed. Well, of course, you and I have spoken regularly over the past year, and we've discussed subjects such as classic motorcycles, opportunities in mining projects in Cyprus, and of course, numerous stocks and shares. Just firstly, though, did you ever buy that Ducati?
I ended up buying a Mercedes car. So yeah, it wasn't quite the motorcycle, but still have aspirations. I think I've just got to kind of work out a few sort of personal plans, and then I'll venture back into it. I do quite like the idea of it, Alan, and I think you've inspired me more than many, or more than most, to look at that as a credible option.
Well, it's a bit of yin and yang for me. I love what we do here at Brand, and it's certainly a vocational career, should we say? But when I can, I do like to get out. It's a bit of yin and yang. It's important for me to sort of chill out and kick back like that, and I can do that on two wheels. But Doc, this is about you. What else have you been up to during your sabbatical?
All sorts, really. One of my sort of deep passions many years ago, and I suppose as a younger man full of testosterone, getting out into the mountains and hiking and climbing was always one of my great passions. So I've been fortunate enough to spend a lot of time doing that, both here in the UK and over in Cyprus. Bits traveling and enjoying the old car, really. So one of the wonderful things is when car prices went through the roof, I decided that that the Range Rover was going to go, and I bought myself a sort of more a cheaper vehicle, should we say, and the old Mercedes. And to be honest, it wasn't for any other reason than the price of cars had just gone through the roof, and I felt extremely blessed to have owned a Range Rover for 3 years and not lost a small fortune on it. So yeah, I mean, I've found it to be quite liberating, just sort of getting in a 30-year-old motor and poodling around sort of North Wales and places like that. It's fantastic. I've had a great time, and I certainly won't be coming back to the markets the same way as I left. So that's something I want to make really clear, because I've had a lot of people direct messaging me and contacting me and calling me up, and look, just want to say it's really, really appreciated. But I definitely will not be coming back and spending the same relentless amount of time sort of battling on in the market. I think there's a way for me to be effective. I think there's going to be some opportunity, and I want to try and make the best of it. So, yeah, okay. That'll be me.
Okay. So, Doc, what have you seen then to convince you that now is the right time to come back into the markets?
Well, I mean, 6 to 9 months of pain in the small cap markets is one main reason, right? I mean, there's only so much pain people can take. I'm sure we'll come on to some of these subjects, but I took a lot of heat off the investment community for sort of suggesting that that COVID stocks wouldn't last, and that there was a bubble forming. And look, we'll maybe talk about that later in the show. But for me, what did I see? A lot of pain in the small cap markets, and quite frankly, hedge funds, pension funds, fund managers in general, often don't have a mandate to store cash long term, right? So I suggest that at some point these guys are going to have to start re-entering the market. There's been a lot of big money sitting on the sidelines. We've seen a bit of a knee-jerk reaction, which is now getting to be a bit more moody with crypto and mainstream markets because of the Russia-Ukraine inflaming situation and all of that sort of stuff. But look, again, call me the eternal optimist, but I can imagine that there'll be trade negotiations more favorable to Russia and military presence for a number of years, and it will blow over. The way that governments control its people is by making these big stands and statements, and we saw that no more so than with COVID. So look, I guess it's a plethora of all of these things. So no, I'm not worried about the Russia escalation. in Ukraine, because frankly, if it does kick off, it won't matter how rich we are or how poor we are, we're all going to end up dead anyway. And I'm totally convinced that this big money that's been sitting on the periphery will have to come back in for no other reason than they don't have a mandate to hold cash. So it'll be cash being redistributed, or it'll be coming back to the market, and that's it.
I agree completely, and I think history has taught us as well that stock markets often do very well in times of war. Anyway, the stock market was booming during the Second World War, so we've got historical precedents to draw on. Then, so as regards you coming back into the market, Doc, can I ask you about your strategy? What strategies you're using as you scale back into the market and into positions?
Well, making sure that I keep a shed load of cash, because I'm almost certain that in a couple of years' time, 23, 24, we're going to start to see problems with markets and finance, and I'm sure there's going to be recessions and all these other sorts of things announced, and that's a credible threat, I believe. But in the interim, I do believe there's going to be a bounce back. I think there's going to be an opportunity in the small caps. I will be retaining a really healthy cash position, so there'll be none of this 70, 80, 90% invested in the market with a little bit of cash. I'll be keeping plenty of it to one side, because I think cash will become a potentially valuable commodity, but we have to hedge. So we have to find some gold exposure, because I think that the global uncertainty doesn't disappear overnight. So I'm looking at, sort of gold stocks. I long talked about the opportunity in Petra Diamonds, because on an annualized basis, they're paying their debt down at a hell of a rate of knots, which means that free cash flow come sort of Q3, Q4, the second half of this year, is going to be immense. So that company is going to grow and acquire quickly, or they're going to start distributing that cash. So I think, having been through quite a turbulent sort of 3 to 6 months in reorganizing the business and consolidating its shares and a vast number of other things, a bit of a slight delay on one of the sort of sites for production, I think that one's going to start to get interesting. And at the current level, I think it still presents a great opportunity. So I can see that thing trading up to sort of 150 to 200p pretty quick. And in old money, that would still only be 3 or 4p. And I think, pre-COVID, it was many multiples of that. So I think there's a great story there. Not a massive diamonds fan, but I think PDL are in a reasonably strong position based on their revenue and the way that they're paying down the debt. And I also think we've got an interesting opportunity in Centamin Gold. It was subject to a takeover not too long ago. I think that was a significant premium to the price today. And I don't think that those people suddenly disappear. I think Centamin are doing, reasonably well. It's in the right space. It looks to be the right price. I wouldn't be surprised if somebody comes and bids for that company again. So, things like that. I talked about Clipper Resources in COVID. I think it was 150 and it's £8.80 now. So, people are always surprised. They say, Doc, I thought you just sort of talked about crappy little AIM stocks. But, we have to be diverse, and finding some of those more sensible opportunities, again, I think are going to be part of the strategy coming back. I
agree. And are you looking? Do you get involved in funds? Do you get involved in the big FTSE 100 stocks and instruments of that size?
When I say I'm going to try and be a bit more sensible, that's sensible for me, not sensible just as a general metric. So, of course, no, I won't be looking at funds and big FTSE 100 companies as a long-term opportunity, because ultimately I didn't make my success, by trading those things. I wish I was smart enough to understand it. So, look, I think I'll have a healthy balance of companies that generate revenue, make a bit of cash, and can get that can grow themselves out of adversity, and they're in an interesting area at this point in time. But yeah, I won't be going too sensible. I'll still be taking a lot of those high risks, and I'm sure there's going to be a few swords to fall on throughout that journey. But yeah.
Okay. Well, let's go to that riskier end of the market, Doc. Obviously, we should say at this point that stocks can go down as well as up, and you have to consider what you invest very carefully. Never invest more than you can afford to lose. But at the riskier end of the market, what's caught your eye?
Well, one of the ones that I've had an interest in, and that interest has fluctuated. So again, just to be clear, I'm buying shares, I'm selling shares, and I'm holding core positions. But I've grown a reasonably healthy interest in Contango Holdings. They've got the Lubu project over in Zimbabwe. It's a metallurgical coal project, and they've got a gold project in Mali. I think it's great value. They recently put out an interview which has sent the share price down onto its knees, which is hugely disappointing because it's traded about 5 million quid's worth of stock last week, between sort of 10p and 6 3/4 today. I think there's a great opportunity. The project floated from memory as a thermal coal opportunity in Zimbabwe. They've found this huge seam that they've tested to make sure that this quality of metallurgical coal is good. They're, as I understand it, starting to sort of break ground there on getting that to surface now. And the fact that we've seen Afrishin, the Chinese, commit to investing $1 billion into projects of this kind in Zimbabwe gives me a great sense of security. I think the recent interview has highlighted some of the opportunity in being able to sell their product and the kind of market that they would go to. I think the nature of the questions has been distorted somewhat. The interpretation has been a little bit distorted, and comments have been made fairly, I believe, in saying the CEO didn't seem excited when he did that interview, and I've relayed that back to him and said, look, you've got to sound enthusiastic about what you're doing, but I suppose when you're traveling around Africa and various places, it's a difficult sort of game for some of these people, and I just think you catch somebody a little bit tired and it comes across the wrong way. But look, I'm really excited. Their gold project in Mali was the thing that caught my eye in the news recently, because they've talked about the fact that they've had international and in-country companies approach them to sit around the table about doing a potential deal. They originally had 300,000 or 400,000 ounces. There's been extensions and extensive testing work completed over the last 12 months, which suggests that this deposit is dramatically bigger, 5 times bigger than initially thought. So they had an opportunity to do a deal for a royalty. They didn't do it, thankfully. So the company's in a better position now, because there is potentially a bigger resource again with these extensions. And now we're hearing international companies. Well, Barratt are there, Hummingbird are there. There's some of the world's biggest gold companies operating and producing within that region. So it's extremely encouraging to hear that that companies are now sort of saying, look, let's actually get under the bonnet and have a look and see what's actually on offer here. So for me, I think Contango's IPO'd at 5p with the thermal project. It finds that its project is significantly more valuable with the metallurgical coal and the huge increase in metallurgical coal demand for steel production predominantly, and the big investment into the country. And then the gold project being significantly bigger with partners wanting to do a transaction. I mean, for me, at 6 3/4, 7p, absolutely, it's risky. I've seen it up at 10 pence 3 or 4 times now in the last year or two, and I'm pretty sure it's going to go there and further in the not too distant future. Market's overreacted. Excellent. It's a great opportunity now, and that's one of the ones that I think is interesting.
Okay, so that's Contango. Any others caught your eye?
I mean, look, I could give a stock for every sector. I mean, I think when you,
I know. Well, I'm just thinking. I think, So we've looked at Petra Diamonds, we've looked at Centamin Gold, and the risky rate.
Well, let's move away from miners if you want to move away from miners. We can talk about companies like you've got Keith Harris sitting in a little company called Semper Fortis on the Aquis. I've got some reservations about how good the Aquis will be, but I know you're a big advocate of the Aquis market picking up over the sort of near future. Semper Fortis, esport exposure, the guy who created Atari for the older people who remember Atari gaming systems, he's on board. So Semper Fortis are sitting out on the Aquis. They floated at 1p, traded up to 4. It's now back at 1 1/4. If you've got a bit of risk and a bit of patience, sitting, parking a little bit in that esports space, given I think Keith Harris was head of the footballing league at one point. Got a big reputation and background, and the guys behind that company are just they're credible. So yeah, I mean, look, esports opportunity, sitting out on the Aquas, trading at next to nothing. I think there's a great opportunity. Particularly, we've seen some interest back in Guild, which is listed on the main markets, and they had a failed listing, but there's a lot more interest now around that sort of space. That again is something to offer a bit of a contrary view to look at Semper over on Aquas.
Okay. Well, Doug, that's fascinating. So we've got four great stock picks there to look at. We are running a bit short on time now. So just to go back to the first half of this year, obviously we've got the Ukraine crisis, which is dominating the headlines. What else do you think investors should be looking out for in the first half of 2022?
Yeah, so we talked a little bit earlier in the show about sort of the COVID sort of sector and COVID stocks, and I don't take any pleasure in seeing those companies now really sort of struggling. We've seen ODX do the Grand Old Duke of York move from these really highs all the way back down to 5p, having raised significant funds at this point in order to take the company forward. Avacta have been in trouble. Novocyte have seen their shares halve. Yeah, I mean, a bunch of these things now are starting to suffer. And I look at companies like Open Orphan and the people behind it, and I think, well, Cathal has brought in a lot of contracts, both with big pharma, governments, the state, massively motivated to keep investing both into that business and into that sort of sector. I think that's a safer play. I think particularly given the people who they're partnering with, and they've got plenty of cash in the bank. And Cathal's, he's worked wonders with relatively small amount of money there. And to think what he's got cash-wise at his disposal, and particularly in the market now, he can be extremely active. So potential for acquisitions and for really sort of scaling up the business, because there's so many parties around them now that's struggling quite dramatically. And then we look at Poolbeg, where he's made a big investment himself on a PA basis. Them shares are off quite a lot from the 10p level down to sort of 6-7 pence now. So again, I think quietly behind the scenes, there's probably a great opportunity in that area. Where do I see there being value going into the sort of summertime through, from spring into summer? We know that the British government have stated that they were going to invest internally. Of course, they have to. We're now subject to this Brexit situation, and the Ministry of Defence have got a whole bunch of contracts. So look at Harland and Wolff. I'm not a great fan of that business from a legacy standpoint, but I look at how much cash they've raised recently. They raised money at 40, 30 and 20p. They've taken a lot of stick for raising that money, but I think they were in a situation now where they had no choice to be able to fulfill the kind of contracts that they anticipate and expect. They need to have plenty of cash to be able to do that. You need cash flow. We know that the British government have stated that they're going to have to send some of the work overseas, because there are 5 different sites, Harland being one of them in the UK, and I think there's more work than, there's bigger supply of work than there is the ability to sort of service that. So we know some of it's going to go overseas. So what message does that say to me? It tells me that we're going to start seeing a number of significant contracts come in from government to those 5 different sites, and Harland's one of them. Now, unless it's just the worst game in town and they can't land the easiest catch known to man, then I think Harland's going to present an opportunity. So, look, we've kind of covered a broad variety of different opportunities, and they're the kind of places I'm looking. ESG has been a hot name for quite some time, Al, and I won't, sort of go into loads of different companies, but, I'd imagine we'll see that. Wickes demerged from Travis Perkins, so I think Wickes is a bit of a safer play. It's £2.40 down to £1.85. I think there's value there.
Good call.
Metal NRG, don't particularly like the deal they did with Ectech. They're highly critical of them, but we know that Rolf and those guys at Metal NRG, they're exposed to that company at 0.6 of a penny, and it's trading at 0.2. And just to wrap it all up, so, finally, I'm probably going to talk about Nostra Terra predominantly because I've taken so much stick over the years for continually talking about it. Allegedly, I'm being paid to talk about it, which is an absolute nonsense. I just look at it, Alan, and I say, well, their revenue for their production is somewhere between $2 and $3 million. We saw figures of 1 million to 2 million when the oil price was dramatically lower. I'm sure Matt hasn't been able to forward sell his production at $90 or plus, but I bet my bollocks to a barnyard door it's more than 70 or 80. And if that's the case, we're going to see a big increase in revenue. If you stack that against Mosman, they've got twice the production and they've got a smaller market cap. So either Mosman, which it seems to be quite popular with some of the small cappers, or the likes of Global Petroleum or TRP. You look at these companies, they've got no production, no revenue, and yet trade at relatively big premiums to Nostra. We know that they're going to do a deal, drill down in Pine Mills. It was, I think, 88 Energy, one of the big popular companies that's now going into the Permian Basin. We know Nostra are in the Permian Basin. So look, I think there's plenty of reasons to say the market has just backed 88 Energy to do a transaction for $32 million in the Permian, and little old Nostra's got assets in the Permian and a drilling campaign underway with production, which is twice some of these other companies that are more popular. So yeah, I think there'll be a payday on Nostra, and as much as people criticise me for it, we've got thick skin.
Doc, that's a great selection of stocks. Thank you very much for taking us through those. Been great talking with you today. Let's catch up again later in the year, see how things are going, and we can find out how the stocks have done too. Absolute pleasure, Al. Thanks for your time today, and appreciate all the support from all the people who contacted me of late coming back. It's much appreciated, and it's great to get back on the horse again. Thank you, Doc.